Welcome back to my YouTube channel. I'm so excited that you stumbled across this video because today we are talking about the qualifying process of securing a mortgage. And it's not just going to be me today. We of course have Mike Schinas from the Vine Group, a mortgage agent. And fun fact, Mike Schinas is actually our first official guest that has been on for a second time.
Yep.
If you haven't seen the original video, check it out. We talk all of the basics of mortgages. And today we're just taking a little bit of a deeper dive, and we're going to be talking about two specific things. One, a tenant to buyer program, which is super unique. It's something that Mike Schinas and his team offers in conjunction with me. And then we're going to also take a deeper dive into the qualifying process. Yeah. We're super excited to have you. Welcome back.
Yeah, I don't know. Thanks for having me. I knew once the first time that we did it, it was time to come back and bring more content to the people.
You're going to kind of share so much knowledge. I think for a lot of the millennials, especially when they're approaching the home buying process, the qualifying for a mortgage is really intimidating.
Yeah.
It feels really vulnerable. I think millennials are like, oh my gosh, how much documents I'm going to need to share, credit scores, how all of that works. So today the goal is to really demystify some of those qualifying myths and really add clarity.
Yeah, for
Feel
sure.
good?
Oh yeah.
Awesome. First, let's talk about the tenant to buyer program because we love talking to first time homebuyers here. And for a lot of those first time homebuyers, they are renters beforehand.
Correct. Yeah.
So really quickly in an overview, what is the tenant to buyer program?
Yeah. So the tenant to buyer program was actually thought of by Johnson Andrews, one of our brokers at Vine. And what it is, in its far simplest terms, is you are a tenant. What are the steps for you to then enter the resale market, right? So the whole point of it is we're able to work with you along the way, depending on how many months you have left in your lease.
Okay.
So even if you're 6 months left, you can have 2 months left. Generally, we want to be at the beginning of the lease just because it gives us the most time to help you out, whether it be down payment assistance and anything to do with credit repair. Maybe you need a boost in your income, whatever it is, the more time, the better.
Okay.
But that's pretty much what the program is, right? So we work with you from the time you sign your lease to maybe your lease end to bring you to the resale market.
Okay.
Yeah.
So I guess if we set the scene, we have a client who is securing a lease. They secure their lease. Ideally, that's when we bring them to you to start this tenant to buyer program. What would the first kind of meeting look like between you and that tenant?
Yeah, so we even actually speak to the tenant client even prior to them signing the lease, right? Because it could actually be the decision factor for them to decide, hey, you know what, leasing is going to make the most sense to me, or purchasing is, right? Sometimes when it comes to those higher end leases, they get very close to a mortgage
It's very true.
payment monthly. And obviously, if you can afford it and it makes sense for you, then why not?
Yeah.
Right? So how the process works is just a intro call with myself. That's when we'll be able to at least identify the strengths and weaknesses of your application right away, right?
Yeah.
Just by talking, chatting. And we'll be able to at least define your goals, right? So once we have that in place, we run an application as if your client were to be purchasing tomorrow. Okay. And from there, we'll have sort of a basis of where we stand. Okay. So from there, we can say, you know what, you can be pre-approved for X amount of dollars.
Yep.
Does that work for you? It doesn't. Okay. If you lease for a year, we can maybe save up save up for this amount, or maybe you're going to be getting a raise next year. We'll have a boost to the income, whatever it may be.
Yeah.
It at least gives us a little bit of a, I want to say, overview of what's going to happen the next 12 months, let's say, for the client.
Yes.
And helps them out really to bring them to the market, right?
Yeah. And I think that you're really optimizing a time because from an efficiency standpoint, as a tenant, especially if you're working through organized real estate, as a tenant, you're going to need to have an updated credit report pulled. You're going to need to have pay stubs, letters of employment. And these are a lot of the same documents that you would need to qualify. So while we have those all gathered, why not take a deeper look to see, hey, maybe purchasing reaches your goals today, or let's get you ready for when that lease is kind of to term.
Exactly.
Cool.
Right. Yeah. And then in terms of the process in general, I know you mentioned documents, right?
Yes.
So that's something that everybody asks me every day, right? There's not a single day where I don't get asked, hey, what documents I have to supply to you? And it's a valid question.
Yeah.
Right? But as you were saying, when you are leasing, you are supplying very similar docs, right? So that letter of employment, your credit report, pay stubs, it's something that we also look at when it comes to the purchasing side, right? So in terms of the process as a whole, we have that first initial conversation, right? We define the goals. We get to sort of take a look at maybe any strengths, weaknesses, like I was saying. And then from there, we're going to the document collection. So a little bit about my process and how maybe it may be different from another broker and maybe from an institution as well, a bank, credit union, would be the process when it comes to document collection. So I get all the docs up front. So for somebody that, let's say, is employed and it's a normal purchase, that's going to be your letter of employment, 2 most recent pay stubs, your 2 most recent T4s, your IDs, and then any information when it comes to the home. So when you get your offer accepted, obviously your APS, your draft deposit, and then your 90 days bank statements for a down payment. Right. And the down payment one is something that I feel like people really get stuck on. And is the toughest portion when it comes to the documents. And the reason why we ask for 90 days is to ensure, number one, that it's not coming from any other lending source. So we need to ensure that you can obviously afford the mortgage, and any factor when it comes to any other loans counts against you.
Super important.
Right. So we ask for the 90 days for that reason. And also for anti-fraud and anti-money laundering, the lenders require to see 90 days to ensure we have a trail of the accumulation of funds. Right.
So to kind of keep that super simple, let's say, we know for a lot of millennials, usually a gift is what helps us with our down payment and our deposit. So based off of that, what you're saying as a best practice is to have that gift in your account for a minimum of 90 days.
90 days. Yeah. So some lenders may actually require to see the deposit of the gift, but then also, for example, even if the gift's not deposited, they may just want to see a gift letter. And then the proof that the funds are going to be provided by the party, let's say a parent, right? So then you see the parent's account just showing there's X amount of dollars that are the same as the gift letter, right?
And it's really to legitimize that money. They just want to make sure that they understand where it comes from, that it's not kind of funny
It's not only for protection for themselves, protection for the client as well, right? We're ensuring that you can afford this transaction. It's very important.
So very similar to the tenant buyer program. And that's why we figured talking about this offering or this program, as well as qualifying for your mortgage, just made the most sense. You kind of started on your process. So we have this initial call. We are ready. We're ready to go. You set them up with the initial documents. We just listed all of those kind of documents that you need. What's the next step?
For sure. So after we get the documents, whether you're employed, self-employed, corporation, sole proprietorship, whatever it is, right? Once we do get your documents in, it actually gets sent over to my team called the Hub. And what the Hub is a dedicated team of underwriters. And what they do is actually do a deeper dive, a full analysis of your application, right? So when we're doing that, we're actually preparing your application for the lender to where we're only missing that accepted offer pretty much. Right. And the draft and whatever pertains to the actual transaction. Right. So once we're doing that, we're getting a full analysis back from my underwriters. And from there, we're able to go through and look at all your options available for you and just go over them with the client with an analysis call and see what makes sense. Right. So obviously, sometimes there's scenarios where there's only one option. There may be 3 sometimes. It all depends on the scenario of the client and sort of what's going to be in their best interest. But sort of that's how it works from that step. Right. Once we have the discussion with the client, we sort of solidify on a product, for example, a term, whatever it may be, an amount. That's when we send it off to the lender and it's a completed package, right? And like I was saying, all we're going to be needing from there is going to be that accepted offer.
And then, so you go through this whole process. At what point are you letting the client know how much they can spend? Where does that come into?
So once we actually do the analysis call and we're able to see the different scenarios, that's when we're able to say, okay, you know what, you can comfortably spend X amount of dollars, right? Obviously, there could be changes in scenarios where a client may be even buying a duplex, right? So now, okay, it's in your budget, but we can now maybe consider the basement rental as the income, right? What's the income in there, right? So usually after the analysis call, that's when we'll say you can afford X amount of dollars. And that's when we'd sort of hand them off to yourself to then go and shop around.
We're going to talk a little bit later on why the approval process is so important before you start shopping. But I think that you can start to kind of put the picture together of having all of your documents ready to go, especially in a competitive market like Toronto.
Oh, yeah.
If we were to do it in reverse, and if we were to come to you being like, hey, we got an accepted offer, but we don't know what our approval is, that can also lengthen that process.
Yes.
Even just from a logistics standpoint, not let alone can you afford
Exactly. And there's so many times that I hear horror stories, right, of clients that are coming to me for a second opinion, and all is starting off as, hey, you know what, my institution or broker, whoever it may be, said I can afford X amount of dollars. Can I? Right.
Yeah.
And I run their numbers and you can't. And it's, how did your broker get to this conclusion? Did they ask for your documents? They didn't.
Yeah.
Did your bank ask for your full set of documents? They didn't.
Yeah.
Right. So it's really important to follow process, and inside processes, we have like efficiencies.
Yeah.
Right. So when we're doing that, we're almost certain that you'll be able to afford that purchase. So obviously anything can happen until we get that final sign off from the bank. Yeah. That's when we'll know we're for sure. Okay. But with very high certainty, we're able to give you an amount to shop with. And from there, you're going to be able to go on, right? And when we go through that process with the client and we now have that track record with the lenders, that's when we're able to now get, better treatment when it comes to maybe faster turnaround times, rates even, right? So when somebody says, all brokers get the same rates, or, you get the same rate from anywhere, you really can't. It's all different, right? Depending on the relationship that you have with those lenders is going to determine a lot when it comes to the client's relationship, right? And just because we have that process, we have such high efficiencies compared to the industry. We're very fortunate that we're able to help out people and give the best service to those clients like that, right?
We've had some conversations about how those relationships can actually support you as the client in that process. So it's definitely maybe another topic that we should have you back on to kind of talk about how those relationships really influence that application process.
Sure. Yeah.
I think that for a lot of millennials, I mean, maybe you're not even a millennial, but you probably have felt the extra pinch this year with the cost of living being so high. I feel like gas is increased, groceries are increased. A common question that comes up is that debt to income ratio, right? Or like, I don't know, like I've put half of my life on credit this year. I feel like my credit score has taken a hit. Like I probably can't qualify. So tell me a little bit more from like a credit score, debt to income ratio, like what are our kind of boundaries that we can play within?
Yeah, for sure. So debt to income ratio in its simplest terms is going to be the amount of debt that your income can sustain.
Okay.
Right. So the magic number that we all use is going to be 39 for your gross debt ratio or gross debt service ratio.
Okay.
And 44 for your total debt service.
Okay.
Right. And all it is your gross debt is going to be your income over any housing expense. So your principal and interest, so your mortgage payments, your heat, your property tax, that's going to be your gross debt service ratio. And then total debt's going to take all that plus any other obligations you may have. So that's going to be your credit cards, car loans, personal loans, right? So that's something that you don't really have to worry about on a day-to-day thing. I think I'd be more conscious about your credit score, if anything. Those ratios are something that myself and my team take a look at for the client, and that's when we can go in there and take a deep dive saying, hey, you know what, this is why you can afford this amount of dollars, just because we have to stay within these guidelines, and your income is already at 40% instead of 39, for example. Right. The credit score is something that I feel like is more important.
Okay.
So Canada is pass fail in the sense where usually if you have around 680 and higher, your credit score, you're going to be getting generally the same mortgage rates.
Okay.
Right. When it comes to your credit score, you really want to be conscious about, before you purchase, your utilization. That's going to be the biggest one.
Okay.
And what I mean by that is if you have a $10,000 credit card, don't exceed around 60%. So don't go up to that $6,000 credit limit. Right. We want to ensure that you're under 60% utilization as a good measure.
Yep.
And that's just something for everyday living. Even if you're not looking to purchase, if you're leasing still, try to always keep those balances low, because they will count against you when it comes to purchasing.
Yeah. I guess it shows that you're responsible to take on that debt and that you can work within it, not using
Exactly.
the full
Yeah,
capacity.
exactly. The capacity is the biggest thing. We are showing that you're not at your full capacity, which means your credit score will be better, right? Usually if you have perfect payment history and your utilization is high, you'll probably be around like the 600 to 590, let's say, credit score.
Yeah.
And then as soon as you do get back on track, that's when you can see your credit score bump up pretty fast, right?
Okay.
Yeah.
So you mentioned 680 as a general rule.
Yeah.
What happens if you have under 680?
So if you have under 680, there's lenders that will still offer financing options to you. Some lenders are actually they have their own internal sort of scoring system as well.
Okay.
Where your credit score may not, really matter too much.
Okay.
Still a factor,
Of course.
but doesn't affect it too much, right? So if you are under that 680, it's still something not to be too, worried about.
Yeah.
They still have financing options. It's just limited.
Okay.
Right. So you're better your credit score. You're going to have more options. When you get that 680 under, you start to limit yourself a little bit.
Okay. Yeah. I mean, I think that makes sense. If you kind of have that lower credit score, then it just changes what
you look more like a liability for the lender, right?
Yeah. And I think that's the magic of the tenant to buyer program, is that you can kind of lay out with the client and put all of these pros and cons and show what they could actually be approved for or what they couldn't be approved for, to really just, knowledge is power, right? To give just that information.
Exactly.
It allows them to make an informed decision.
Exactly, right? So if during the beginning of the tenant to buyer process, like I was saying, when we make them, or we pull their application, we pull their credit, we run their application entirely, okay, your credit score is a little low.
Yeah.
Why is it low? You have high utilization, like I was saying, right? Or maybe you miss some payments. So whatever it is, we're able to at least work through that and eventually lead you to homeownership, right?
If you haven't followed me yet on Instagram, please do. Dyson Realty. I talk about the topic of a mortgage broker versus an institutional like bank. So I have some strong beliefs, but before I share mine, I'm curious, what is the advantage of working with you and your team versus just going with my bank that's TD or Scotiabank or any of the
whoever it is. Yeah, for sure. So for myself, I actually started my career at an institution as a specialist, right? So I saw the sort of mix, best of both worlds, right? And I can say there is a clear difference when it comes to working with a broker or a bank. And the number one thing is going to be who is working for who. That's the way I like to look at it, right? So a specialist at a bank is always going to be working under the bank. There's always going to be the bank's best interest in mind, right? Where when it comes to working with a broker or an agent, I work for the client, right? I'm going to be doing what's in your best interest. Right. And that means having good business practices. I'm not going to be going after products that have higher commissions or, lenders that may offer better volume bonuses or whatever it is. End of the day, we're in the people's business and we happen to do mortgages. Yeah. Right. So for us, it's that relationship, making sure it's the client's best interest. Right. Now, the other thing that is really important when it comes to the difference is going to be the flexibility in your options. That's a huge one for people, especially nowadays. It really helps to have that flexibility just because there's multiple lenders that offer a wide range of different scenarios and different combinations when it comes to their products that it may make sense for you. Everybody's different, right? You can't compare apples to oranges, right? Yeah. So, no two clients are the same. You're not all going to fit in the right place. So you have to have that flexibility. Yeah. Right. I think it's good. And the last thing is going to be just being proactive. So for myself, how I handle my business at least is every client is tracked. Meaning I know exactly when their mortgage is going to be up for renewal. So maybe we can contact them earlier to see if it makes sense for an early renewal. Right? Or keeping them on a loop in terms of marketing. What's going on in the market right now? Does it make sense to break your mortgage down and maybe get an investment property? It's just all things that are a little bit different business practices when it comes to working as a specialist than being a broker or an agent. Yeah.
And I think for especially first-time home buyers, I think for the assumption, and I had this assumption too, is that I've been with my bank since I was 13 when my parents opened a bank account. So of course they're going to give me the best. I have the loyalty there, but we're not suggesting that you don't explore what your bank has to
for sure.
offer. The cool thing about a broker is that you can also
Offer your bank.
offer the bank.
Yeah.
And for a lot of clients, go walk into your bank and
Yep.
see what they can offer you. And then also get an opinion from a mortgage broker who can compare multiple banks, multiple products, and they just give you the options. And it's a complimentary service. You don't have to pay to get the information.
No.
So
Yeah.
like, why wouldn't you? And the crazy thing, I think my opinion is obviously pretty apparent, but I think the crazy thing is that it's the difference of thousands of dollars sometimes.
Yes.
Because the bank person that you're talking to at the bank is just going to throw whatever the general rate is. They're not actually taking a look at who you are and what your application looks like and how you can play in the field. So I think that for buyers especially is like
It's
biggest.
night and day. It's night and day, right? This is, as if you were saying, I encourage people to go to their bank.
Yeah.
Right? I really do encourage it. And even if you are working with me and you would like to go to your own institution, fine, I can bring you to your institution. That's perfectly fine, right? There's nothing stopping me, right? There's nothing stopping you. That's perfect.
Yeah.
So it really is that flexibility, like what we were saying, right? And I feel like when it comes to the market now, you have to have that, a little bit of that edge when it comes to, you know, having your docs all complete, having it locked in with a lender, being able to fulfill a condition of financing, right? Because everything's already done, right? So I think it's a little bit different in the contrast.
Yeah,
for sure.
So we kind of talked about it like very quickly there, but how much does a buyer pay you to do all of this work? So offering the systems and the processes that you've already talked about, gathering your documents, sharing them with your underwriter, sharing all of the different documents or different rates that are potentially available for you, then also nurturing that relationship, because you mentioned that you also stay with that client through their mortgage life. So you're obviously offering like the moon. So this probably comes with a pretty hefty price tag for the buyer, right?
So I feel that's something that people really speak about, and they have that idea that there's a fee to a broker. Right? There has to be a fee for some kind of service, right? And certain scenarios, there is a case where there is a fee.
Okay.
So usually when it comes to the private lending or B lending,
that makes sense.
Right?
Fair.
So that's going to be more distressed sort of lending, maybe low credit. We need to get more affordability out of it, whatever it may be. That's sort of where you would sort of be expecting fees. When it comes to traditional A lending, so the big banks, usually you're not going to find any fees at all for my services, right? And even ongoing after we're done the transaction, there's no getting rid of me, right? We're not breaking up. This is we're now going to have a relationship over the term of your amortization, even of your mortgage. Some people have a 30-year amortization, right? I'm going to be around for that long.
Yeah.
So in terms of that, it's people really can sort of do whatever they want when it comes to the lending space. But for sure, the relationship is going to be lasting, and there's no fee for that, because like I was saying, it's the relationship business.
Yeah.
I want to make sure over your 3-year term, everything's going to be okay. Maybe you need to pull additional funds for a renovation. I'm there.
Right.
So it's just that added service. I think is going to be the difference.
Yeah. So free.
You're free.
For most, obviously, there's always caveat and differences. So
for sure,
it's not a free across the board, but for most mortgage processes and first-time home buyers,
it's a free. Even for the consultation call, right? Even for if you want to have a conversation and just ask questions that you may have, and you may need B lending or private lending, that's still free. Right. And when we get to that actual lending portion of it, if there are any fees, that's going to be disclosed to you. And regardless how I run my business, I always try to take the avenue that's going to be the cheapest for the client.
Yes. Love that.
So that even means maybe not even going with the best interest rate.
So I feel like we've already busted so many myths in our conversation so far. So I'm going to live in my game show era. So we have a sign.
Yes.
So I'm going to list a common myth. These are things that I've heard from clients, from other professionals. These are things that your clients have asked you about.
Yep.
And we're going to rapid fire. You are in the hot seat. And we're going to see if it's a myth or a fact.
Let's go.
Feel good?
Yep.
All right. Let's start with, you need a perfect credit score to be approved for a mortgage.
Myth.
Yes.
That's false.
What about 20% down payment is mandatory to be approved for a mortgage?
Also a myth.
Also a myth. If you missed our first video in January, definitely check that out because we talk a lot about the different down payments and the structure. So it's definitely something you don't want to miss. Self-employed individuals cannot get mortgages.
Also a myth.
Also a myth. All right. Pre-qualification equals loan approval amount.
This is also a myth.
Okay.
And I'm going to
Please
interject here, right?
Yes.
I'm going to get in between this one. So the reason why I say it's a myth is because I've had too many circumstances of clients come to me saying I have a pre-approval and they even give me a letter.
Okay.
And it does not necessarily mean that you'll be qualified for that amount. Too many times have I ran them through now my process and it's come short, or maybe it's come even a little bit higher.
Yeah.
Right. So that to me is, depending on where you go and who you work with, that's going to be a myth.
Yeah. And just really, really quickly. So pre-qualification and pre-approval.
Entirely different.
Super different.
Yes.
So
yes.
2 seconds, break down what a pre-qualification is.
So there's a bunch of different terms actually in the industry. So there's
Okay.
like pre-position, pre-qualification, pre-approval. All of them are very similar and can also be considered, all very different, but can also be considered similar.
Okay.
Right. Pretty much where it is we say a pre-position is going to be a pre-approval with all your docs in, and you're ready to go to then a full live transaction. Okay. Right. Where more of a pre-qualification is more, hey, how much income are you getting? What are your expenses roughly? And here's your number. Right. And a lot of the pre-qualification you're going to see is most likely going to be online when it comes to a online broker that says, get pre-qualified in 5 minutes or 10 minutes or whatever it may be, right? All those are a little bit not my favorite.
Yeah.
Yeah.
Get improved instantly. Right?
Yeah,
Like
exactly.
how?
It's exactly how, right?
All lenders offer the same rate.
Another false.
Okay.
Right? So lenders like to be competitive. So they're always adjusting their rates depending on where they are in their own business. So that's where it comes to that. And then also depending on the relationship the brokerage has with that lender will affect the rates too.
Okay.
Yeah.
It is easy to get approved while you're on probation at work.
Yes.
Okay.
Yes.
Tell us more.
So in the scenario, and I've had clients like this already this year, in this scenario where let's say you leave your job and you get a new job, but it's in the same field, similar position, still under probation, you could get the exception to get an approval still. Based off of you're in the same fields, you're making the same money, you're in the same, let's say, position.
Yeah.
It can work.
Because
right?
it shows that you have longevity in that
industry. You've been in the industry, right? You're a seasoned vet already. You already have the experience, so it's less of a likelihood of any probationary period to negatively affect you.
So
right?
I would assume it's safe to assume that if you were promoted and still in that probation period,
there's still So when it comes to promotion and probation, you could still, I would say it's still on an exception basis.
Okay.
So that's why I say it's both true and false.
All right.
Because it really depends on the scenario.
Changing industries could hold up the process.
While we're getting the pre-approval done? Yes.
Okay.
Yeah, that is true.
And that's kind of based off of your last answer.
Yeah. So sometimes when we are getting the pre-approval done, let's say it's 90 days out, right? Lenders may ask for updated documents, whether that be a letter of employment, pay stubs, whatever it may be. So obviously if there's now a difference, hey, you can't provide us with a letter of employment, you can't provide us with updated pay stubs. What happened? Oh, I got a new job in a different industry. We now have to then go back to say, okay, what's your new salary? What's your new position? Are you under probation now?
Yeah.
Does it still qualify? Right? So any changes when it comes to employment, that's something during the process I really like to speak to my clients about is let's avoid it. Right? Stuff like that can really, mess up the process or back it up.
Yeah.
If it's something that has to happen, let's wait. Let's sort of see if we can work around it and put a strategy that makes sense. Pre-approvals
last indefinitely.
False. False. So generally pre-approvals are between 120 and 90 days. Even between that period is not guaranteed. right? So pre-approvals have conditions like they need to validate your employment. They need to validate even property tax to be a certain amount, right? They can't exceed $4,000, for example, whatever it may be. So they do have for rate holds and stuff like that, you are looking at 90 to 100 days, 120 days. But generally speaking, it does not mean that it's 100%.
Next one is you can get a mortgage if you have no credit history.
You cannot, right? So
Makes sense.
yeah, so lenders need to ensure that you do have responsible credit usage. You do have some sort of credit score. So yeah, if you do not have a credit history, it's going to be tough for you to get lending.
Next one, I think it's going to be a stumper. It's cheaper to rent than to own. Both myth and facts, true and false. In some scenarios, it may actually be cheaper to rent, right? There could be, you could have rent for the last 10 years and you've been sort of grandfathered in, right? And your rent is super low compared to what it is right now, the cost of owning a home, right? But when we take a look at scenarios like that, you have to take a look at what's the future opportunity cost that you're losing out on. Can we leverage your property in the next 5 to 10 years to then help you purchase another property? Right. So it's that other sort of hidden cost that people don't really take a look at. The cost of appreciation of, let's say, your home, the cost of, let's say, leveraging your home in the future that isn't factored in because it's unrealized, right? People don't know what it's going to be at that time. It's hard to calculate it. So certain instances, yes, it does cost more to rent than to own long term. Generally speaking, like if we're talking legitimate numbers wise, it does cost more to own, but the future value of owning is far greater than renting. All mortgages are a 30-year fixed term.
So that is false, right? So not all mortgages are a 30-year amortization, right? So you can have a 25-year amortization. As you pay down your mortgage, it goes down to 20, 15, 10-year. And you always have the ability to renew at your amortization at that point, right? So it doesn't necessarily mean that you have to go back to a 25 or a 30-year. So at the time of renewal, if you're at 21 years, we'll just renew again at 21 years or 20 years, right? So that's false. Myth. Myth false. It's not all mortgages are 30-year AMs.
So, and I think that there's a really important detail here that your term of your mortgage is different
than your amortization. So your term is the length of time where your specific, I want to say, terms in your mortgage. So your prepayment, your rate, all the terms that actually have the details of your mortgage are set with that term length. So whether it be 1, 2, 3, 4, 5, you can even do 7-year term. That's your term length. The amortization amount is the amount of time or the amount of years it's going to take for you to pay down that mortgage, depending on your payments at that time. So if you do a prepayment or you pay down mortgage balance, aside from your monthly payments, that'll affect your amortization. That'll lower it.
Last one is that you can't pay off your mortgage early.
So you can't pay off more early.
You cannot pay off your mortgage.
So that's a myth. That's a myth, yes. So like I just mentioned, we have something called prepayment. And what prepayment is, or prepayment policy, is the allowance that you're able to pay down your mortgage each year. So maybe your anniversary year of your mortgage, or maybe each calendar year, right? So you are able to pay down your mortgage early. If let's say you have a 20% prepayment and over a 5-year term, you can, if you're taking advantage of that 20% prepayment every year, you could pay down your mortgage early in terms of your amortization. You'll reach the date of your term length, but in terms of your amortization, it'll be early, right? So you do have the ability to pay it off faster than you more normally would.
And what you're really doing is you're avoiding paying all of the interest you would if you just paid your payment for the whole entire term maturity of the loan.
The amortization. And the thing is with that too is right now with my brokerage and my team, we're even coming up with strategies to take advantage of prepayment policies like that. Where we're able to save somebody on, like, let's say a 5-year term, we're able to save them upwards of $15,000 if they're able to take advantage of the prepayment policy, right? And that's another thing. The difference between now a broker and a bank is we're taking a look at those strategies. I want you to pay down your mortgage fast, right? So strategies like that are sort of what the difference is. And we're always trying to find ways for you to pay down your mortgage faster, save money, save interest, and to exceed and to, surpass their goals. Right.
I love that.
Yeah.
Myth or fact, Mike is the best mortgage agent out there.
That's a fact.
Fact.
Yeah. That's
it's a freebie.
That's true.
I gave you a free one. Yeah,
that's true. That's a fact. 100%.
Amazing. Well, thank you for playing along with my game. And I'm curious, leave a comment down below. What is a common myth or a misbelief that you've heard about the qualifying process in mortgages?
Yeah.
Mike and I will be in the comment section, and we'll
be responding.
We'll bust those myths.
Oh,
All right, let's continue just a little bit further. We're going to talk about why qualifying is so important. And I think I'm going to take this one just a little bit because
for sure.
The idea is that once you get qualified with Mike or a mortgage agent and you have an understanding of what you can afford, what I really love about Mike's process as well is that he'll actually break it down on a monthly
budget sheet.
Yeah. And you also include any kind of condo fees or maintenance fees. And that really helps give you a really specific number. And when I sit down with my clients, I go through two different budgets. So of course there's the budget and there's the approval amount that your lender has approved you for, but there's also what are you comfortable with spending?
Yeah.
And I think that is arguably more important than what you can spend, because that's where the term house poor comes in.
Yep.
And I'm kind of going on a little bit of a tangent, but the reason that having those numbers so crystal clear before we start home searching is that it's really awful experience when you don't know what you can afford and we walk into a beautifully turnkey, ready to move in home and it's $200,000 over your budget.
Over budget, yeah.
That is like the most demotivating experience. Yeah. So having that budget is really important. We don't go to grocery shopping. We don't go clothes shopping. You don't go to the mall without knowing how much you can spend. And there's no difference in your home buying process, right? And for me, having your approval and having a relationship and a line of communication with your lender or your mortgage broker also allows me to be informed on how to best advocate for you through the negotiation process, through writing your contract, what conditions do you need? So it sounds real, like I think for a lot of especially first-time buyers, they're like, this is so much work to even just like get into my first home. Yeah. But the process and the systems are there to truly protect you in the long run. And I think that's why both of our kind of respected areas of the real estate work, we focus so heavily on that process and the protocol because we want to protect you at the end of the day.
Exactly, right. It's always in the client's best interest, whatever we're doing. And if you're willing to follow my process, Jay's process, it means we know that you're serious for the transaction, right? It means that we can put our 100% work into whatever you want to achieve because we know that you're willing to put the work back.
So we talked about a lot of things today, obviously, and this has been a lot. And let's talk timing. Yeah. So in an ideal kind of applicant situation, from first call to ready to shop with Jay, how long is that period?
So it's all going to be different for every client, right? A lot of times the longest portion comes when the document collection is coming around.
Okay.
And that can be from HR taking a little too long with the letter of employment.
Yeah.
So there's stuff like that we can't really time. But in a perfect scenario, if I have the intro call with a client, immediately after the intro call, you get their portal. So it's a custom portal that they go into. It's tailored to them.
Okay.
They would go in there and fill out some information, fill out their documents. And from there, once I get it and submit it to my team and I do our work, we're looking at probably 1 to 2 business days. Right. Sometimes the weekends. I work on the weekends as well. So it could even be 2 days. I won't even say business days. Yeah. Right. So that's where we'd be looking at for that stage. And then by the time I have that analysis call with that client, we go through their options. We go through the budget sheet, let's say another day. and then we are able to solidify and send to the lender. So total from the conversation, our first conversation to shopping, I want to say a week and a half. Yeah. And we have to give that buffer time, like I was saying, to the lender responding back to us. Maybe the client can't speak at certain times. Maybe HR is taking too long with that darn pain stub, right? Like you don't know, right? So generally, let's say a week of time. Yeah.
And it sounds like a lot of the pitfalls or holdups in the process are from like a logistical. So you mentioned HR, maybe you're feeling like you don't have all your documents ready to upload. So that's going to hold up the process.
Exactly.
But if you had somebody that was fully ready, they had all their documents, HR was like compliant, like we were good to go.
Yeah.
A week.
A week or less.
Amazing.
Yeah. So it's just because we know what to ask for documents-wise. We're not going back and forth a whole lot.
Right.
And my underwriters are honestly, like those guys are heart and soul, right? Yeah. Like those guys really know what they're doing, and the way that I'm able to work with them, we're both on the same page. We both know that, you know, lender A is going to be better than lender B for X amount of reasons. It's a good feeling knowing that you can work and collaborate with a team like that.
I love
that.
Yeah. Yeah. So this video hopefully has added some clarity into the qualifying process. Maybe you're a tenant and you're interested to know kind of what your action plan is to home ownership. So we've gone through a lot of different things, but maybe you don't have time to sit and watch this video. We have an amazing resource that will help you be the most prepared even before diving into that discovery call with Mike.
Yes.
And can you share a little bit about this resource that you're providing?
Yes. So along with my Homebuyers guide that I'll be providing for anybody that does follow and click the link to learn more.
Yes.
I'll also be providing a free consultation call to Vine Wealth. Amazing. And what Vine Wealth is an advanced strategy sort of division of Vine Group.
Okay.
We're able to help clients with, let's say, Smith maneuver, rental cash damming, any way to help them save interest with mortgage strategies, utilizing their prepayment policies, or taking advantage of certain mortgage products. That whole division of Vine, what they'll be getting is just a free consult call. And like I was mentioning earlier, for somebody that's, let's say, refinancing on a $500,000 mortgage, if they're able to use a strategy that we're using today, it was upwards of $10,000 of savings, right? Amazing. So it's small things like that, but they'll get access to that if they do want to click the link, book a call. You'll get the Homebuyers guide and then a free consultation call for Vine Wealth.
Amazing.
Yeah.
So check out the link down below. There will be two. One for Mike's buyer's guide.
Yep.
And this walks you really through the buying experience from a mortgage provider's lens. So it's really going to set you up for success.
Yes.
And then two, because he already offered that in January, so we needed something new. We're also going to offer that call where you can get a little bit more strategic. And I know you kind of talked about a lot about refinancing, but for our first time home buyers, there's some creative strategies that we can dive into to really bridge the affordability gap.
Yes.
And I mean, we could probably talk about this for ever.
Yeah, I feel like it's still something for people to have value in.
Yes.
Just because if you're more educated on how to take advantage of your mortgage, how it works,
right,
how everything to do from the initial phone call with me to our entire process to identifying your goals, and then to have access to advanced strategies when it comes to Vine Wealth, you're preparing yourself for a long and successful career in real estate.
Yeah.
Right. So that's where the value comes in. It may not be now, but when you're learning and you're educating yourself about even something that's going to happen a couple years down the line, you're better off than if you're not learning.
I totally agree.
You should never stop learning.
Nope. That's amazing. Yeah. Thank you so much, Mike, for coming back on. Where can people watching, if they want to get in contact with you directly or if they want to see what you're up to, where can people find you? So
all my socials are at Mike Schinas. So that's going to be both my TikTok and my Instagram. I do have my link tree on my Instagram and I believe TikTok as well. So you can always book a call to chat with me if somebody just wants to bounce around ideas, or feel free to always DM me. I'm always answering those as well. And he is very quick to reply. So you will get a response very quick. Yes.
Thank you so much for tuning in and watching this interview. If this is your first time here, once a month, we have a different expert come onto the channel and show their expertise specifically for first-time buyers and first-time sellers. So we're really kind of wanting to give you the tools and tips and tricks through this YouTube channel. So if you love this value and you want to see us continue to create this, please like, subscribe, and I'll see you next week.